Hi guys, I'm Toby Mathis with Anderson Business Advisors. Today I'm going to show you how to build passive wealth the smart way. If you're in your 30s and you want to retire in your 50s, this is for you. So sound like a plan? Then let's dive into 5 proven strategies to build wealth without trading your time for money. It's huge. And yep, we'll talk about tax advantages along the way as well. But let's start with number 1, which is to invest consistently in the stock market. This is the foundation for so many successful investors, including Warren Buffett, right? We're talking about index funds, ETFs, which are just big buckets of stocks like VOO for the S&P 500 or VTI for the total US market. Historically, over time since the beginning, they return about 10% a year. That's powerful over time. And let's just take a time out and talk about risk reward and drawdowns, because this is just a fact of life. The market doesn't go up in a straight line. It's all over the place. You're going to have drawdowns. You're going to have drawdowns of 20%, 30%, sometimes even 40%. So if it would cause you to lose sleep because your account went from 100,000 to 60,000, if you cannot stay the course and continue to hold in those circumstances, it's going to be very tough. But if you can, statistically, over time, usually about 15 years, you stay in there, it's almost 100% guarantee of return of around that 10%. And that's why it's a long-term endeavor. Sometimes if you have short-term stuff, that's not going to be appropriate. And that's where you're looking at other things. Now, speaking of other things, what if you prefer income? Then you might look at dividend ETFs, like the Schwab dividend ETF. There's VYM. There's even Devo, which is one of my favorites, where they're doing covered calls and dividends. They pay cash that you can reinvest. And now here's the real magic. And this is what works for people no matter what your income stream. Use tax-advantaged accounts like your 401k, your traditional IRA, Roth IRA, or there's even a triple threat where you get a deduction, never pay tax on any of the growth, and it's tax-free when it comes out, like an HSA. And this means your money compounds, tax-deferred or tax-free, depending on the account. Or if you're already making good money, you want a vehicle that allows you a bunch of tax deductions you're probably missing, you could use an entity structure like an LLC corporation mix to shield the income and allow you things like writing off your computers, travel, home office, even 100% of your health care, to name a few. And I will make sure that I'll put a video on trading as a business in the show notes. I want to make sure that I'll put that in there so you can go right to it. So let's talk about pros to step number 1. Step number 1 is investing in securities. Long-term growth, minimal maintenance, like this is not something that takes any of your time. Multiple streams of cash. That's a huge one. And by the way, I wrote a book on this called Infinity Investing. What I'll do is if you go and type in free book in the comments, I do this in a lot of my videos, I will send you a link to a free PDF of the book Infinity Investing. I won a gold medal. It was a bestseller on Amazon. It's still on Amazon. You could buy it for 30 bucks or you can get it for free, the electronic version, just by typing in free book below. But what about the cons to number 1? Well, the market risk, right? It's not a straight market. If that's going to drive you absolutely nuts, this might not be for you, but for so many people, it's been really great. Possible penalties if you withdraw early from things like a traditional IRA, 401k, like when you lock that money away. I remember a video on Grant Cardone going, I feel bad for you if you have a 401k. No, yeah, there's a potential penalty of 10% if you take it out too early. The trick is if you need money out of it, borrow it out of it. There's accounts where you can borrow, and making sure that if you do have an emergency, there's usually an exception to that penalty. There might be a tax implication, but just dealing with it. Overall, this is a must-have in any wealth plan. It is where I start everyone who is beginning. And keep in mind that 90% of the stock market is owned by the top 10%. Over half is owned by the top 1%. If you want to be rich and independent, do what the rich and independent do. And again, just type in free book down below in the comment section and I'll send it to you. There's a free link to Infinity Investing, absolutely free. Now let's talk about number 2, real estate investments. I love real estate. I have hundreds of properties, not doors, properties. Commercial properties, buildings, single family, duplexes, multiplexes, mobile homes, pad splits. I love those, which is basically a boarding house, apartments, commercial, even a 20,000 square foot MMA gym. I'm an addict to buying real estate and hope you can catch that bug too. With rental properties, you get monthly cash flow and long-term appreciation. Plus, you get this huge benefit. You get to take advantage of some tax tools like depreciation, cost segregation, real estate professional status, even the short-term rental loophole, and 1031 exchanges, and even the poor man's 1031 exchange. If you don't want the hassle of tenants, then you might want to consider doing something called a REIT, Real Estate Investment Trust. It's a real estate fund, basically, that you buy like stock, and you get the exposure to real estate. Now, what's the pros to real estate? Well, rental income, steady Eddie, and it grows along with inflation. Potential for capital gains. And for those of you guys who watch me on the tax stuff, you know that capital gains can be taxed at 0, 15%, 20% for long-term capital gains. And that's what you're looking at when you're holding real estate over the long term, is you could be in a great position to, when you cash out of some of these properties, to be in that 0 and 15% bracket as opposed to your ordinary rate. So there are strong tax advantages whenever you're doing real estate. What are the cons? Well, if you're going to invest in real estate, I would just say make sure you have a buffer, because you're going to need upfront capital. There's all these folks out there that are like, buy properties for nothing. Okay, yes, you can get into a property for nothing, but what if you need a new roof? Sorry, that's not going to be nothing. You're not just going to be able to conjure that out of thin air. And you also need good manager, at least a good property manager. And that might be you, but a lot of us, the idea is not to be working in our real estate, but on that all the time. We want to have it as a passive income source. So the bottom line, real assets like 1 and 2 never go out of style. How about number 3? Let's do this. It's a little different. Build digital or scalable assets. I do this. Create something once and it pays you again and again. Think blogs, this YouTube channel, online courses, ebooks. I have a whole bunch of musician friends, even music and digital products that earn royalties. I did a video with a gentleman by the name of Shane Sams last year, and boy, is he a good teacher. And I'll put it in the show notes as well. So guys, you got to make sure that you're grabbing these videos that I'm throwing out there so that these guys can just click right to them. Shane was a high school football coach, and he built a subscription service where coaches would pay a low monthly amount to get his playbook and updates, like $30 a month, right? And he ended up with thousands of people doing it. His wife did the same thing for school librarians, but she sold lessons plans. And they sold those businesses for millions of dollars, and then they just kept at it. History lessons, yep, he did that. Just about any topic you could think of. And then he started teaching others, and has helped thousands of people build the same type of business, usually on Kajabi, but that says it aside. These are low cost to replicate, and they scale. The pros, there's high potential. You only have to do it once. The cons? Well, the cons on this one is it takes time and effort up front, and you've got to stay consistent early on. But when it starts rolling, it's a cash machine. So I love that. Number 4, and I do this one myself as well, peer-to-peer and alternative assets. This includes things like peer-to-peer lending, like Prosper in ground floor, crowd-funded real estate, or even private equity. You guys have heard that term a lot lately, right? These give you access to income-producing assets outside of the stock market. And I'll just give you my experience on 2 of them, Prosper and ground floor. One of the things, what these are is they basically, you could either loan on specific loans that are available, like first trust deeds or loaning to somebody so that they could pay off some of their debt and all those things, or it's real estate, again, sometimes first trust deeds, or you could just go ahead and say, I'm going to pool it, where you have like $50, $100 that per loan that you're doing, $25 per loan, you can actually set it, and you're in there with thousands of other lenders. And my experience is that we're making around 11 to 12%. And this is the interesting part, is if you could get low-cost debt and you do this exact thing. And listen to me very carefully on this because I want to make sure I'm not misunderstood. But let's say that I borrow a a line of credit. Maybe it's against a piece of property, a house, maybe it's a credit card, but I get that money for 6%. And I'm going to attack it and I'm going to pay it off within a year. But I immediately take that and I put it into something like a ground floor or a Prosper where I'm getting a higher interest rate. My experience is that Prosper has been a little bit better than ground floor. That's just my personal experience. I haven't sit here and back tested them, but in my accounts, I've always been over 11% in Prosper. But let's just say I did that. I'm making a spread, right? I'm making a spread, and I'm using all the money that's being generated off these notes. Usually they're 2 to 3 year notes on Prosper, and I'm just using whatever it's coming back, and I'm immediately paying down whatever it is the debt I used to start it. And there's a spread there that I'm making money on that I wouldn't otherwise have availability to do. So, for example, I'm sitting here with zero money, but I have access to $10,000. I get the $10,000, immediately invest it, and then attack that $10,000. Hey, I'm going to be paying it off anyway. Maybe I'm paying $1,000 a month. So in 10 months, I will have paid that off. And then what do I have after 10 months if I paid that off? I have the $10,000 that I put into short-term notes or peer-to-peer lending that's generating money, plus I have whatever money it generated and it's starting to compound, right? And I keep reinvesting it. That's how some people do it. There's actually groups that I know that I'm actually a part of that teach some of this stuff. I'm not a huge debt person, so sometimes it's not my cup of tea, but I've seen people do it successfully. And so I'm saying if you're in that position, and let's say you can get your hands on $50,000, this is another potential area where, hey, I can actually be making money that otherwise I wouldn't have any return. What are the pros to doing this type of activity, peer-to-peer lending specifically? There's higher potential returns. It also diversifies out your portfolio so it's not just all real estate and stocks. But what are the cons? Well, they're less liquid. You're going to be stuck in them for a little bit. My experience, again, I actually did this with both Prosper and Ground Floor. I turned off my investing and I wanted to see how long it took me to get back my money. It could be up to 3 years, right? Because you have 3-year notes. But my experience is that you get the vast majority of it back within about 6 months, probably a year. So it is going to be illiquid, and the risk can be higher. So make sure you're doing your due diligence. And I wouldn't just go lending to your friends down the road or something like that, unless you had somebody who was really good at real estate, for example, and you said, I'm going to secure it, and you're going to do it like that. And maybe they're flipping houses and they just need some short-term capital, things like that. Maybe this is another interesting thing. You could do this out of your IRA and things like that, but it's just a good option. And if you're looking to diversify beyond the usual routes, it's a good one. Number 5, entrepreneurship. Let's see if I can say this right. It's entrepreneurship with an exit plan. In other words, start a small, scalable business. We do not want a golden cage here. We don't want to create your own job. What we do is we want to create a business that's going to grow and that we're going to be able to sell. So e-commerce, consulting firms, plumbing, boring businesses, service businesses with repeat customers are great. Or a software company with a subscription and returning customers. Investors love those, right? Just going to say this again. Do not build a golden cage, a high-paying job for yourself where you're the only expert. The key is to build systems and automate wherever possible and position it for sale down the line. You can earn income now and then potentially walk away with a big payout later. The pros of this is the upsides are huge. And I've done this one as well and exited with private equity. I know what I'm talking about. They pay a multiple and you get a big upside. You can control the growth. The cons, well, the risk is higher. You're starting a business. There's no guarantees, and you'll work very hard in the very beginning, right? You build up a great HVAC business, right? And you're in there, like everybody's doing that right now. They're the rage of private equity. Oh, we just love these things, right? There's people out there just going out there and building these to sell to them because they know if I can get the numbers right, I can make a ton. And if you build it right, this can be your fastest path to financial independence, in my experience. And I can only share what I actually have experienced and what I know. I'm not going to just read something and regurgitate it back to you because I've read a book about it. No, this is stuff I've lived and many of my clients have lived. I don't care whether it's in the medical, whether it's software, whatever. I've seen so many exits. One of my buddies is one of the biggest business brokers in the United States, and I'm always asking him, which are the big ones? I mean, you could just go do the pizza shop, right? You build up a good profitable pizza shop. There's people that just want to buy those. Or Meineke was always my favorite. I see it on TV all the time, right? You build up something where it's a great auto shop or whatever, and you have systems in place. Not you, the mechanic, but you have a system in place that works. I remember Minute Lube when it came out. Now they're like Quaker State. There's all these little oil change places. I remember one of my mentors was a guy that's what they did. He did Subway franchises and he did Minute Lubes. Super successful. Very valuable when you build them up, so long as you put in systems in place. Money. All right, before we wrap, here are a few key principles to remember. Number one, say this to everybody that'll listen, start early and stay consistent. It's not about timing the market, it's about time in the market. Whether you're in stock market or real estate, it's just consistently be in. Number two is reinvest your earnings. This isn't I'm going to suck all the money out and go buy a Ferrari, right? It is let's build this thing and allow it to grow over time so it's going to continue to get more and more valuable. And I'm just going to do a caution here. Please avoid lifestyle inflation. As soon as the money starts coming in, don't increase it. And then diversify across income and growth. In other words, you want money to come in. That keeps us going. I remember having this conversation with so many business owners. You got to have the cash in. They're like, no, I'm just going to sit here for 2 years and work really, really hard. I won't take $1 out, and I'll just, I'll live super, super lean. Okay, that's great, but that's very, very short term. You got to have it to where there's income coming in, so you're not sitting here worried about money coming in. Keep yourself modest, keep yourself humble and hungry, and just really let that income carry you, and let that growth be from compounding, because you're not forced to sell something. The worst thing that could happen to you is I need cash and now I have to liquidate something. 2008 is the example for everybody to remember of what happens when everybody rushes to sell something at the same time. The market crashes. You don't want to be in that situation. And always use, whenever you're investing, tax efficient accounts and strategies. I don't care if you're starting up a new business. Maybe it's an S Corp, maybe it's a C Corp. If I'm going to sell it, maybe I'm using the 1202, the capital gain exclusion, so I can get my gain out tax free. Whatever the case, make sure that you're talking to a good tax advisor. Heck, just subscribe to this channel. You're going to learn enough tax things to choke you, because that's what we talk about a lot. This is how you build sustainable passive wealth and retire early. If you're in your 30s and you're wondering where to start, this is it. Watch this, rewatch this video, take these steps, because quite literally they've helped a ton of millionaires and allowed them to retire early. If this was helpful, hit like and subscribe to the channel and drop a comment below on what strategy you like. And by the way, if you're out there using these strategies, tell me that too. Say, this is what I am doing, this is what I plan to do, and put it in writing. It's like magic when you do those things. It's going to make you more accountable and you'll do it. And if you want more in-depth strategies, just type free book into the comments and I'll send you a link. I'm Toby Mathis. Thanks for watching, and I'll see you in the next video.